doing code, not running companies. But yeah, that's right. A question at the back?
Yeah, there we go.
I've just wet myself. Sorry.
Hello. What do you think
Hi. I heard you talk about Coinbase earlier in regards to the government seeing everything you do. I just wanted to know your opinion on what was the optimum way of depositing large amounts of cash into the system in regards to changing your cash to crypto, because I use Coinbase at the moment and it's pretty fine, but it sounded like, based on your opinion earlier, it was a negative. That's one question.
Yeah, so the answer to that is I don't actually know. Steve and I, this is an issue Steve and I are facing right now with our crypto business.
Okay.
The fiat on and off ramps are, like, up until now we've been using Santander, and I've been able to put as much money from a corporate Santander account into Kraken.
Right.
But now that we can't do that. And loads of people, like, I got loads of comments on my YouTube video when I said that, and everyone's like, try Monzos, try Starling, try Swissborg, try whatever. They all still allow transactions to a degree, but you're limited to like $3,000 a month max So large amounts, I have no idea. So do you guys?
I mean,
Nationwide, no go.
I've only used Swissborg for the last 2 years now, and I'm with Barclays. They were typically one of the worst with cryptos, but I've never had a problem. I've been moving 5 figures, but I haven't moved anything over since October last year, so that's 12 months. You know, it could have changed, but yeah.
I don't know.
I use Cater Allen, which is they're a fork of Santander, so I'm hoping that what happened to you doesn't happen to me. But at the minute, it's been okay.
Are they a subsidiary of Santander? Yeah. They'll probably have the same thing then.
But you can use Revolut as well.
Max limits. There's no way you can send a couple $100,000 from Revolut or into crypto. They have their max limits.
Last question. You said that you're a Polkadot moon boy. I just wanted to get your opinion on the stepping down of Gavin Wood, and if you think that is a negative
question.
or something good.
I see that as a positive. I really do see it as a positive. Why have a developer as a CEO? Get him doing what he can do, working on the development, not on the day-to-day running or where he wants this company to go. For any of you that either are CEOs or know of people close to you that are CEOs, you know that they start a business or they start a company, start working for a company because they enjoy doing that, and then suddenly they get thrusted into completely senior management, and they're not doing what they actually originally are doing. So I don't think it's a bad thing. I think the community has accepted it as a very good thing as well. I don't think it's had any negative reaction from outside of the community. I mean, the price is going down, but it hasn't gone down any further than anything else has. So for me, that's a good thing. Hopefully Gavin can get into, bring some really good quality add-ons to what we've got at the moment, and making sure that the sort of the layer 0 protocol, the projects that are going to work off that, the interoperability is all going to be there, and he can oversee that from a lot better point of view, actually looking at the zeros and ones of the coding side of it. Just my view.
Yeah. No, it's spot on. Like, there's a guy at the back called Neil, and if you see him later, he's got his hand up there. He's a phenomenal business owner, and he used to run massive sales teams. And I think you said that every time, most companies, they put their best salesperson as the manager of the sales team, and then everything goes to shit. You need to keep good salespeople doing sales, or good coders doing code, not running companies. But yeah. That's right. A question?
Hi, so there's been some really interesting stuff going on with AI. I don't know whether many people have been paying attention, especially generative AI. So GPT-3 might ring a bell.
Oh, yeah.
People.
Scary.
Stable diffusion I found really fascinating. Image generation, just from giving a tool a written prompt, it creates amazing images. Separate to that, we've obviously seen algorithmic trading bots around for quite a while, and they're quite limited in their capabilities, as I know you have personal experience of Siam.
Mm-hmm.
But we're starting to see the development of more sophisticated AI trading tools now that claim to offer the potential to allow a non-trader to perhaps trade as well as an experienced trader. So maybe integrating things like price analysis, sentiment analysis, macroeconomics, and all sorts of other things, I'm sure. So I'm interested to know what you think the potential of AI is for trading, whether you think it genuinely could compete with experienced traders, and what that would mean for both retail and institutional money.
Do you mind if I take this?
Go for it first.
I've struggled for 10 plus years trying to get bots working. And then in 2018-19, I thought we'd nailed it with this new bot that we had, which had machine learning. And it was actually good and bad at the same time. So if you're a good trader already, you could use that old RT bot really well. And we had traders in the group who were doing really well. So Kevin, I don't know if Kevin Harvey's here. He absolutely loved the bot. He was milking it with the bot because he was a very good trader in the first place, and he understood, trading systems like expectancy, risk-reward ratio, Sharpe ratio, all that sort of stuff. And so he used it well. And what we found is that the reason I stopped doing the bot is I think the net result of it was a bit potentially more harm than good, because lots of newbies were coming in and just going, screw it, I'm not going to bother learning to trade. I'm just going to turn this bot on and it'll make money. And the reason being is that, and I say this over and over again, so I'm sorry if I'm teaching you all to suck eggs, but there are 6 different market conditions. Volatile, up and down and sideways, steady, up and down and sideways. So 6 different markets. So you need to have a trading strategy that is perfect for each market condition, right? So first of all, the bot or the trader has to look at the chart and know, okay, what type of market condition is this in? Because it could be, Monday, Tuesday, Wednesday in a volatile trending market, and then all of a sudden go to a steady ranging market, just like that. So the bot or the human needs to know straight away that the market condition has changed, just like that. And then the bot needs to turn off, let's say, the trend trading systems, and then quickly turn on the ranging systems. Now, where people go wrong is that they don't react quick enough, and so teaching a bot that, it's very hard, because ultimately it's if this happens, then do that. It's if this, do that type coding. And sometimes there is that intuitive thing that you can't code. So I would be able to look at a chart and go, oh shit, sentiment's changed based on all sorts of other stuff with Twitter or news announcements, plus the market looking different. But if your trading bot is looking at some moving averages or some MACD or stochastics or whatever, inherently that will be lagging and won't notice that shift. Or it won't notice that Genesis now has 2 days to rustle up $1 billion loan. And there's been times in crypto where the most perfect chart pattern has popped up, and then it not do what it should do because news announcements have changed stuff. So I think algorithmic bots or AI-controlled bots, I think would be good in more stable markets, which are less rumor-driven, like Crow, like Crypto.com, Harry mentioned, etc. But I still think it's too early. I've really tried. I do keep on top of AI. GPT-3 scares me. DALL-E is awesome.
There's GPT-4 coming very soon, and I saw a demo the other day where it had written some code to calculate a probability related to population. I can't remember the exact problem, but it ran the code and got an answer of 0 probability, realised that must be wrong, so it went back, edited its own code itself, got a probability of 1, again realised that must be wrong, and then did a third iteration and got the correct answer. So it's writing code and rechecking its own work now.
I just don't think the retail public will ever get a bot that just makes money hand over fist, because if you can get your hand on a retail bot like that, well, you have to understand there are banks and hedge funds out there that are ploughing tens of millions of dollars per month into quants, as in algorithmic traders, coders. So I always think the big boys will always have that edge. I don't know, it's just my pessimistic thought.
I don't know enough about AI, but certainly I kind of echo what Simon said there.
Are there any things in the security world that people aren't aware of, or that we should be aware of, that you've seen?
Piece of string, this long. Yeah, there's loads of things, mate, honestly.
How do you store your crypto?
On a Trezor.
On a Trezor?
Yeah.
What about a Bitcoin? If you were to own Bitcoin, where would you store that?
In the same place.
Same place?
Yeah.
So you'd, okay. So,
I'm keeping it simple. I only want a few coins, and I just want, I don't want the big gallery of coins, just want the Bitcoin and Ethereum, because we know that they're safe. Well, we don't know that they're safe, but they've got the history, which shows us that, they're going to be around in the future.
And what other security things should we be doing as mere mortals? Like, other than VPN, Trezor, is there anything else?
The basic stuff. It's like buying a car. You're not going to buy a car with bad brakes or no MOT. So the basic layers that we put in, VPN, just a dedicated laptop for crypto, checking all the websites you go to or what you want to actually go to. And keeping stuff on your Trezor. Basically, that's the only form of extra layers we can put in to protect ourselves at the minute that we're all sort of can do.
Oh, okay.
I haven't seen anything else that.
Cool.
Yeah.
I always try and pick his brains for stuff. I'm sure you know stuff you're not allowed to talk about.
Talk to me later.
Let's get him drunk tonight. No.
Hello?
Steve's got it.
You win.
Excuse me, it's probably a question based on something Siam said, but I'd like to hear the others comment on it. So I think it was probably a cuddle or two ago where you stood up there, Siam, and you said, no one's going to regret buying ETH at $1,000. You know where this is going.
Yeah.
And you've stood up there today and said no one's going to regret buying Bitcoin or the equivalent at the prices it's at now. So what's the downside to doing that, or at least dollar cost averaging in, say, 25% of your pot now and the rest over the next period?
Okay, it's a good point. I said this on an Avenger call a couple of weeks ago, and I stand by it. Anyone that tells you they know the bottom, they don't. They're just using probability of what they think the bottom is going to be. So for all I know, Bitcoin could get to $500, okay? We can't say hand on heart it won't. But yeah, you're right. So it's all about you thinking about your risk appetite and how far you want to take it. Now, we've already discussed today that Bitcoin's fallen around about 77, 80% from its all-time high last November. Yeah, I'm sat here, 95, 90% still in stable coins. I mean, does that seem like the correct balance in terms of risk to reward of we've already seen an 80% drop and yet I'm still keeping most of my powder dry to go back in? The answer probably to that is no. And maybe actually the balance that I have is not quite right. And I've been thinking about this for the last couple of days, whether I should start buying some more. But then it takes you to, well, how do you go about doing that? What's the safest way for you guys to do that, to make sure that you don't overexpose yourselves now, just in case anything could happen to drive the price lower? And you mentioned it, whether you call it dollar cost averaging or pound cost averaging, is certainly a way to go about that. I think there's some levels that have been identified which seem to have a lot of attention towards those, whether that's from a fractal pattern, whether that's from just people talking about it or whatever, and they could be levels that you'd want to target. But you could then start to think about, okay, I'm going to move into this, I'm going to do it at a certain percentage of my portfolio at key levels as we go down. The problem with that at the moment, though, is the FUD that we've got around exchanges. Because if you want to leave a spot order open on a centralised exchange, you have to leave that funds there. Now, I know there are decentralised exchanges you can use, which I think most people in here have heard of GMX, and I know that I've never used that myself, but then you've got to weigh up the risk appetite again of, do I want to leave a large sum of money with several different buy orders for a prolonged period of time over a centralised exchange, and do I feel comfortable with that? Or is it a case of I'm just going to have to watch, periodically check in on the charts and see where the prices are and accept that you may miss some? I remember calling, laddering in around about sort of 30k down. Now, if I'd done that, I'd have looked a little bit silly, because we've gone a whole lot further. And that's the whole point of, you just don't know where it's going to go. So if you are going to look to DCA in, don't feel that you have to now be 90% into the market, because you can hit it on the way down and when on the range it on the way back up. I do think we will range for a considerable period. The market needs to find some sort of stability, some sort of recuperation from the fall that we've had. And so I take you back to 2020, I missed 3,800. Yeah, I felt stupid at it at the time. 5,000 is where I ended up. But in hindsight, that didn't feel too bad in the end. So I bought it was £16,000 Bitcoin it was, because I did it on an exchange which was doing it in pounds, not dollars. That was around about $17,000. If I buy some now, it's around about 16.5. Okay, it may go down to 12, may go down to 8, may go down to 6. But actually, I've already weighted out the largest brunt of the fall, so I should be, accepting to take that. That's how I'm looking at it. People always want to know if I have moved in or if I haven't. If I do decide to, I'll probably mention it on an Avenger call, but it will be a small percentage for me initially, and I'll just be looking for key support and resistance levels. And the good thing about having some spots, if you do decide to do that, if we do range, you can then look to sell and take a bit of profit and then wait for it to come back down. If you haven't actually bothered entering the market, you can't take advantage of any rally that happens. So there's a payoff to sort of that risk appetite there. So that's where I'm looking. I don't know if Sean's got a view.
Buy now.
Yeah.
Everyone likes a bargain, so instead of waiting for the Black Friday sales to go to the stores to buy nonsense goods, start buying your crypto if that's what you want to do. Don't wait for Siam, don't wait for Harry. Decide your own plan, mark out your levels, buy your crypto.
Can I add to this? You also need to be really crazily honest and aware of yourself, okay? And I have so much experience with dealing with investors, and it's just crazy. So you can all be here, right? Listening to all this good information, good advice, or not advice, nothing's financial advice here, good opinions, and go, okay, yeah, so we've got to be aware of this dip, it could bounce, blah, 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 blah. And let's say you agree and say, okay, I'm going to buy stuff now. How easily could you sit there and let's say you buy Bitcoin at 16K right now, 16 and a half. How would you actually, in real life, react to the market if Bitcoin suddenly spikes down to 6K? How would you actually react? Now, loads of people say, oh, I'll be fine because I'm playing the long game, etc. But will you really? I know I've seen firsthand so many RT students say, yeah, I get it. The market absolutely shits itself, and then they turn into absolute chimps. And they start blaming everyone but themselves. They blame me, they hate the market, they start hating crypto. Oh, this is shit, I'm never touching this again, blah, blah, blah. And what happens is they go, actually, screw this, I'm selling all my Bitcoin at 6K, and I'm getting the hell out of it. Only to watch Bitcoin go from 6K to 100K or add whatever number. So really, how comfortable are you sat there, are you, if your pot suddenly drops 50%? Because it could. Bitcoin could go from 16.5 down to 8, 9K, easily. And loads of people say that they're cool with that, but actually in reality, they don't. They kick off and they start questioning every single thing. And the other thing is, I guess you said this a lot, Steve, the difference between flippancy and unattachment to your bags. So I have been personally criticized quite a lot. It's a continual thing. I always get the same criticism. Siam, you're too flippant with your money, or if I've got someone else's money, you're being too flippant with my money, if that makes sense. And the thing is, I'm not flippant. I am just completely unemotionally attached to my investing. If I'm trading money, whether it's my money or someone else's money or whatever, I literally do not give a shit if I lose a trade. And that's not because I'm being blasé or I just don't care that I'm losing other people's money. It's because, as a trader, I've learned that the second you put any emotion into it, you're going to lose even more. So you have to be completely unattached to it. Where, I remember Ellie, earlier this year, there was a day I made $350,000 profit in one day, just from some trades going well. It was great. We're on holiday. And then I was like, oh, hey honey, look, this is cool. She was like, oh, wow. And then a few days later, she was like, what, last night, why? Or the next day, she was like, why didn't you celebrate? Or we didn't even open champagne or anything. I was like, honey, this is just trading. Tomorrow I could lose $500,000 or whatever. It's I never celebrate any big wins. I may go, hey, yes, that was awesome, good day. I then get on with my life. But it's not because I don't care. It's not because I'm flippant or whatever. It's just that you just have to remain a robot or an alien So,
I mean, just to
yeah.
not to want to take you back to my presentation earlier. Thanks for the segue into this, Steve. Yours was fantastic too. But it is about mindset in terms of if you're spot buying for the long haul, then you need to have that acceptance. See what I'm doing here? That you probably haven't got the bottom, and you are going to see some drawdown on that. If, however, you're looking at a short-term trade, you really actually need to look at the short-term environment, whether that be fundamentals, technical analysis, or whatever. But certainly for myself, when I'm buying, and I have been, I've not had any desire to sell the spot buys that I've been doing, because it's small amounts, and I'm happy to be drawn down in that at the moment. But it's not a trade for me right now. This is actually about establishing my position for the next run. And I don't know when that's going to be, but it's going to be sometime, between 18 to 24, 36 months away. So I'm just trying to slowly edge myself back in there. I still have a very, very small pot to do a little bit of trading, to scratch that itch, or whatever you want to call it, to just lose money and give it back to Bybit. But so I think getting that mindset, getting that understanding in your head that I'm not putting everything in, because if you did put everything in, it drops to $6,000, that hurts. If you put 5% in, it spikes down to $6,000. You've still got more to play, and we've got it a spike. Remember, it's going to come back up. Chances are you might not even be looking at a chance to miss it. So yeah, mindset, acceptance. We watch it.
My second question has to do with trading, and I remember in the spring and the early summer, you could just about look at the calendar and tell you where the market was going to go. And this was because of quantum tightening. But I haven't heard you mention anything about that. And I was wondering, where would I look to predict when the Fed is going to actually put their big hand in the market and take another scoop out?
Do
you understand my question? Where do you look to see what exactly is the agenda for quantum tightening and when they're going to actually get the big claw out?
So that information is known. In fact, we do, in the Discord group, we do kind of talk about that. So you've got CPI data, which is released every month, around about the middle of each month. So it's either the 13th or the 15th of December next. And then you have the FOMC, which is the federal rates. Which it's 8 times a year, so it's not quite every month. They're not the only ways in which you can understand when quantitative tightening are happening, but it's quantitative tightening right now because of what they're doing. So you use the CPI, because then we want to see what the inflation's like. Inflation it's kind of stagnating at the moment. It's still very high, despite months of increased interest rates. And so we are still predicting in December that they will raise the federal rate again by 0.5 or 50 basis points again. So we're still in that quantitative tightening mode, and I think Goldman Sachs think that it will get to probably just under 5% or just under 6% by the middle of next year. So we know that the next couple are probably going to see it increase by 0.5% each time. So that is predictable, and we talk about that, and I certainly watch the markets very well on days where they announce it.
So you know what I mean when I said, in the spring you could just about look at the calendar and know what was going to happen.
Because if it's happened so rapidly that he's going to disprove my dates here.
No, I'm not.
But at the beginning of the year, we were less than 1%, and then now we're at 4% for the US, and the UK is not doing much better. But those days that it is announced, it's such a volatile day. I recommend people don't actually trade it. Certainly don't trade the first hour after it's announced, because it's just bots or market makers just taking liquidity off people, thinking that they know what they're going to do. So rates go up, everyone thinks, right, the market's going to tank. First thing it does is climb for half an hour and then tanks, And so, the volatility I tend to avoid unless I'm already in a trade. And then I'm just watching it and praying that my stop loss is far enough away. But yeah, it's certainly interesting. But those are known. Forex Factory is what I use, forexfactory.com/calendar. You can you can detag different countries, so I just focus on the euro, the pound, and the dollar, just because I'm sure people would say there are other economies I should be looking at, but otherwise it's just too much. But it's a good one to use.
Yeah. And we sort of know what they're going to do. They've said that they want to hit 4 to 5% inflation interest rates by Q1, Q2 next year. So they will keep on rising. But the only thing that's really keeping me up at night, or not keeping me up, is there's been no time in recent US history, or as far back as data shows, so no time since at least 1959 where the US currency supply has contracted. No time. The US currency supply has continually expanded. Even during 2008, it didn't contract, it just sort of went sideways a little bit. No, in fact, it didn't even go sideways. If we look on, say, a monthly chart, it still went up. Sorry, 2008. It never went down. So for the first time ever, the US M2 has not just stopped going up, it's now contracting. It is literally contracting. Now, every now and then the Fed does these, sneaky beaky credit lines, etc. But this chart shows you a very terrifying thing from a financial point of view. The US currency supply is shrinking. So every single time Bitcoin has been on one of its 4-year cycles has been during an expansionary phase. No one has ever seen Bitcoin react in a contracting phase. Now, the thing is M2 just going to do this and carry on doing that? Or is it going to do this? Well, if it does the latter, and it just goes down, let's say, from where it is 21.5 trillion down to, say, 18 or 19 trillion, Bitcoin could be hovering around at $1,000. There's literally nothing stopping Bitcoin going down to $1,000, $2,000 if the US currency supply contracts massively. So that is the only thing which could actually scupper everything. So obviously, as a crypto investor, I want to see this. I want to see I actually want the Fed to be absolute douchebags and print their way out of oblivion, which is what every politician under the sun has ever done. So I'm hoping that the douchebaggery of the politicians prevails, if that makes sense.
I mean, there's other metrics that you can look at. So at the moment, the quantitative tightening, because they're trying to bring inflation down. So I was going to say what we want to see. That's not the right term for what I'm saying. A way of knowing that is working, inflation is coming down, is unemployment also rising. So you can have a look at unemployment data and see where that's going. Everyone always says it's lagging data, though, so you've got to take it with a pinch of salt. But interestingly, if you do start to follow that and you have the time, you will see that every time these things are announced, the market does move. Doesn't always move the way you think it's going to, but these news events do generally move the market. And it's just because at the moment, we went through years of interest rates at really low, sort of 0.25, whatever. Now we've got to the point where it's so high, people expect it. But what's crazy is the last federal rate that was announced was an increase of, is it 0.5 or 0.75?
0.75. 75.
But 0.75. The market rejoiced because everyone thought it was going to be 1%. It still went up by 0.75, which is unheard of in modern times. Yet the market went up. Great, risk off, we're on. Risk. It was just a very strange thing, and everyone's predicting now that it's just going to be half a percent. I get these on the way around. 50 basis points for the next few. And if it is that, you will see the market, for some random reason, will rally like this is the best news ever. And I mean, I am no economist. Better just say that. But it's not going to, when we get to 5%, it's not going to suddenly magically just drop from 5% down to 0. It's going to take months, quarters to actually slowly taper that back down to a level. I think I want to get down to 2%. We're talking years probably to get there. So, bit of an interesting time. But I find Forex Factory, there's loads of obviously TradingView tell you that information as well, but useful to watch.
Luke?
I'm changing the whole thing. So just going into NFTs for a sec. So with regards to 3D printing housing and stuff like that, where do you think house prices will eventually get to decline, and do you think that then will facilitate, in terms of people looking at the houses and needing to make money out of it, would that actually proliferate the idea of NFTs actually will take tokenizing?
Yeah. The moment you have a secondary market in anything, the price of those things tends to go up eventually. And in fact, ignore NFTs. 3D construction printing, when that gets to maturity, that will just destroy house prices left, right, and center. It will absolutely destroy house prices.
And do you think that would also impact on owning the land versus the price of it?
So, sorry if I've mentioned this on trading pubs before. The land prices, I think, will still remain quite buoyant because you still need the land to print on. All that 3D printing will do is at least halve the building cost of building a house. So if you take a shitty Taylor Wimpey house that they've constructed really cheaply, really fast, and you know you're going to be fixing it in 5-10 years' time. Let's say they've spent 100 grand building a 300 grand house, right? What 3D printing will do is they can build the same house, but instead of 100 grand, they'll build it for 20 grand. So, and this is what, and I really want to get into 3D construction printing. It's great because Steve's got experience. He used to own a freaking construction company, and we've got in-house expertise in that already. But like, if we fast forward 5 years and the 3D printing tech is actually really good now, like, it won't be the Taylor Wimpeys that push that industry. It'll be random degens like me and Steve going out and buying, you know, £1 million 3D construction printing thing and going, right, we're going to buy shitloads of land and let's print a small town. Why not? And then sell the town at almost cost price, just to get proof of concept out there, or sell, you know, a 300 grand house for 30 grand just for shits and giggles. Like, it's going to be idiots like us that actually push things forward. And when you look at things to the limit, to a degree, let's say you have 100 houses selling for 300 grand each by Taylor Wimpey, and 200 meters down the road, we have Steve's 30 grand house. No, not 3. And so instead of 300 grand, let's say we're selling them for 100 grand. All of a sudden, just for the very fact that we have created almost identical houses, but actually built tougher, last longer, etc., and they're a third of the price, not only will it screw over the Taylor Wimpey houses, but it'll subdue all the house prices in that whole local area. Because you then set a new precedent of house prices, just full stop, in not just that road, that general area. It's going to absolutely destroy house prices.
Do you think that would
I can't
wait. Facilitate the idea for then making back that money in terms of total?
And anyone that's going to be putting their money and mouth and their reputation on 3D printing, you know, to even entertain the idea of tokenizing these houses at the same time is like, yeah, why not? Screw it. Like, the people that will be doing 3D printing houses are innovative risk takers by, you know, inherently. So adding NFTs to that, it's probably like, yeah, why not? Let's see what happens. So yeah, instead of selling one house at 300 grand or one house at 100 grand, it'll be like, hey, we're going to sell, here's a house, but we're selling 100 chunks of it, or 100 tokens.
I guess could even argue climate change. You could just say, look, it's going to cost, climate-wise, be cheap on the environment.
Yeah, exactly, and it is. If you want to put the climate change thing, 3D printing, because it's additive manufacturing instead of subtractive manufacturing. So by definition, subtractive manufacturing, you are causing waste. So if I wanted to stamp a metal shape out of something, I get a big sheet of metal, and I stamp out the heart shape or whatever thing. The rest of that's waste. Yes, you can reutilize that or melt it down and back, but there is waste there. So 3D printing, by actual definition, is additive manufacturing where there's minimal or next to zero waste. So moving, again, forward to house printing, to city building, etc., 3D printing is, if you want to put on the climate change hat, the best thing for the planet. So.